The piece of the business that someone is stealing is your profit piece. That's the piece they're stealing because rent has to be paid. Loan payments have to be paid. Payroll has to be paid. So the extra is the profit. Once the profit is gone, that's when they start stealing and it's impacting payroll taxes. And that's when it creates a lot of other. But while there's profit in your business, if someone is stealing, they're stealing that profit, which then is why it creates a cash flow problem.
Less stress, more time, more money. Welcome to the Cashflow Contractor interview.
Martin, we've come a long way with our tech difficulties, but before we got things sorted out for the most part, we once upon a time recorded an episode with Leah, and it's somewhere, it's in the abyss. But what do you remember from that episode?
That I wanted to have a podcast with Leah.
Oh.
No,
Exactly.
One thing, we'll get into it, but she's got a really interesting background. We haven't even said the topic is forensic accounting. I was telling my wife that this morning. She goes, "What?" I said, "Forensic accounting. You ever watch CSI? We watch all they do that, like working on the body, they work on the books, you know." She goes, "Oh, thrilling."
Thrilling.
I said, well, it is if somebody's stealing from you and you find out about it, right?
Yeah.
So, or
Yeah,
better
definitely.
yet, that you can be sure that people aren't stealing from you. So
Yeah.
I really love this.
Yeah. Leah, welcome to the podcast.
Thanks for having me. Happy to be here.
Yeah. Excited to have you. For the second time, hopefully this one will go live. It will.
It will.
Man, I don't even remember when that was. It had to have been a couple of years at least. But tell us a little about yourself, Leah, for our listeners. Who are you? What do you do? And give us your background.
Sure. So since I was 12 years old, I wanted to be an investigator. And that dictated a lot of my life choices to this point. And so by the time I was in high school, I knew I wanted to work for the FBI. So I even chose my degree in college based on how the FBI hired. So there's like 5 different ways to, and I wanted to be an agent. So there were 5 different programs you could enter. And it was like accounting, law, IT, language, or then just other. And so I was like, well, I got to choose one of these 4 because I can't, I don't want to compete with other. I actually started off, so I moved from Texas to Oklahoma to attend Oral Roberts University. Started off pre-law. That required way too much reading about things I did not care about. I needed some numbers in my life. So I switched to accounting. And between my junior and senior year of college, I had the opportunity to work for the FBI as an honors intern in West Virginia. And then that was extended where I got to return back to Tulsa, work for the resident agency here in Tulsa under a forensic accountant for the remainder of a 2-year position. And then I had to decide what to do with my life because my dream job happened when I was, 19, 20 years old. And it all seemed downhill from there. So I looked at staying with the Bureau and just didn't think that was the best career move at the time. So I went into public accounting. Within 3 months of being in public accounting and prepping tax returns, I went and had a discussion. We would have mentor meetings, and the firm was small enough at the time, that's much larger now, but small enough at the time that we would have mentor meetings and that the partners would sometimes sit in. And this partner said, "What do you want to do with your life?" And I said, "I don't really know because, my dream job, like they all knew I left my dream job for now this public accounting tax prep job." And they said, "Well, what do you want to do?" And I said, "I think forensic accounting is becoming a thing that the private sector will pay for." And so 3 months into the job, I'm like 23 years old. They're like, "Well, let's see if we can get some cases for you." So we ended up starting a forensic accounting division, but I still had to prep tax returns. And that was not desirable. That was a crazy life. So almost 13 years ago, I started Workman Forensics. And so that I could just do forensic accounting and fraud investigations. So I'm located in Tulsa. I have a team. Our investigative team is a team of 4, myself and 3 others. We are small but mighty. We are working in an incredible number of cases at the moment, really, and since beginning of 2021. And we have a podcast. We have training games. I wrote a book. There's just anything where we're just constantly looking to make what we do accessible to more people and educate them on just how powerful forensic accounting can be. And one, that it's really not that boring. It's also just really trying to simplify it for people, that it doesn't have to be complicated, but it can really solve some problems for them.
Let me clarify one point. You were out of the FBI before Sylvester Stallone came to Tulsa?
Yes.
You know, the Tulsa King?
Yeah.
Yeah, the FBI's okay, so we can't ask about Sylvester.
No,
funny.
I mean, I was done with the FBI in 2009, so that's been a little while. Other than I still refer cases to federal law enforcement.
Okay.
Yeah. So, but all of
There you
my friends who were there, I think the last person who was like that we would work cases together, he retires at the end of this year. So I kind of
Could you maybe define forensic accounting? I was talking to somebody this morning and they said, "What's that?" And I thought, well, that's a good place to start. What is forensic accounting?
So technically it means accounting that can be used in a court of law. Forensic means to be used in a court of law. So whenever you're thinking of forensic science or whatever. Now, in more like conversational terms, and especially what we do is investigative accounting, to be even like if we wanted to break forensic accounting down even further, because technically a business valuation that's being used for litigation purposes is forensic accounting. Economic damages could be a form of forensic accounting because it's just accounting used in a court of law. But the way that my firm and the work we do, it's really investigative accounting.
And how would you define investigative accounting specifically?
Yeah, we're looking for, we're usually identifying what happened. Somebody needs to know, one of the number one in an embezzlement case, somebody's always saying, the call we get is, "Hey, Leah, there's something wrong with cash," which I know probably fits really well for this podcast.
It
But
does.
somebody's saying something's wrong with cash. And, we've looked at our operations. We think operations are fine. So we must have a leak somewhere else. And then we'll come in and I mean, gosh, 95% of the time when somebody calls me with that concern, there's some sort of fraud involved.
I was talking to Leah beforehand. When I was writing my book and looking things up, I found a stat from the Association of Certified Fraud Examiners. Is that right? ACFE.
Mm-hmm.
And this was 2018. It was fresh information at the time, but 5% of sales in business in the United States is lost to fraud. Sales. And our listeners who understand have heard us before, the average company in the United States makes 7% to the bottom line net before taxes. So if 5% of sales is being stolen, they're either wiping you out or they're cutting your net profitability in half. And I know we've got listeners, we'll get to this, of course, that go, "Oh, that's interesting. That happens, that guy over there, that's too bad. Never happened to me," right?
Right.
So what is most common as you're going into these investigative accounting projects? Are you primarily seeing the fraud happening on the side of the owner or on the side of the employee? What's more common?
So, most of the time, well, it kind of depends. And we actually categorize these separately. So there's certain kinds of engagements that we're hired for most often. We used to be hired a lot in divorce. We just completed our last divorce case, and I'd like to keep it that way for a little
Why
bit.
is that? Why?
Yeah. So, oh my goodness. All right. No, anyway, so we try not to do a lot of divorce anymore. It used to be about 50% of our work, but so it could be embezzlement, which is employee theft, which you mentioned. But then there's also partnership disputes. And that's when we end up seeing that one of the owners is, benefiting more than the other. It's not necessarily criminal fraud, but it's definitely civil fraud in those types of things. And then we also end up working theft out of like estates and trusts or guardianships and things like that. So those are our 3 big areas and kind of how we categorize them. So what's more common between employee embezzlement and partnership dispute? It really depends on the year. right now, for some reason, 2022 just set off this like chain of partnership disputes for us. So the majority of our work right now are partnership disputes.
I would imagine something with all of the stimulus money to businesses had something to do with that. The infusion of cash was too big to not create some sort of chaos.
Right. And back to the, like, we should have more cash than we think we have. It's, I think there's also, like, because usually in a partnership or even in an employee embezzlement situation, there's somebody that's handling the financials and then somebody that's not watching. Like, that's what's similar in both situations. And so in either situation, especially after all this money was infused because of the pandemic, then I think there's an expectation by the non-money person in the relationship that, oh, we should have a lot extra. And so whenever they don't, that's what's triggering I need to look at this. So,
yeah.
And also I was mentioning to Martin earlier before we recorded that, right now money is expensive to borrow. And so people are looking for, why is cash tight, or cash is tight? Does this make sense? How can I find ways to cut costs and things? And whenever that starts happening, which is normal in a recession for my work, our work actually goes up, because whenever they start looking, that's when they find problems. So we do have those signs, kind of similar behaviors of a recession right now, because they can't go just borrow to make up for that difference.
Well, I had talked to Leah about this before too. I was in one of my companies a victim of fraud. Big to me, but relatively small perhaps to some, $340,000. But when I think back over the years, I look at well, never mind all the details, but that cash thing, you have small enough business, you just got this idea, probably ought to have $230,000, $40,000 in the bank. And the bank calls up and say, I got a $30,000 check won't clear. What? Well, it just so happened the person I called to rectify that was the person who was stealing the money, and she moved some things around, but there were a lot of warning signs as I went along. Man, that just doesn't seem right. But I had trust, and it betrayed me. So
yeah. How did you come up with the name Workman's for your business?
Oh, it's my maiden name. I started this business before I got married. Yeah.
Workman. I was thinking like
Workman.
like workman's comp, or maybe the tradespeople or something like that.
No.
Okay.
That is like the number one question I get asked, though, in presentations or podcast interviews. Yeah, it's Workman is my maiden name.
Hey, you come up with a really cool story around. Well, that's a good story. So
yeah. So you talk about taking the complex and making it simple for people. I'd love to hear, some of the primary things that you see go wrong. You've already kind of mentioned one where in a partnership dispute, there's more of a finance person versus maybe an operations person or whatever. What are some of the most common things that you see that you're just like, that was so easy for you to solve, or for you to avoid that? What are some of those like things that business owners really need to be aware of?
If the financial person will not provide consistent or just regular routine reports, that's the most, this is one of the biggest red flags to me. I have a case right now that over 5 years, I'm looking at $21 million in expenditures. This individual, the business owner, has no financial statements, none. And so whenever we started requesting some information, they said, oh, she was keeping it in Quicken, which there's a really funny YouTube short, by the way, about somebody using Quicken. But anyway, from a really I shouldn't have brought it up because I'm terrible at remembering these things. But anyway, I should share this. But yeah, so she was keeping the books in Quicken, and as long as the bills were being paid, nobody asked her for the financial statements. And if they had, she wouldn't have been able to provide them because she's keeping them in Quicken, and that's not going to provide what you need. And so, that's the one that's most top of mind right now because we're working on it. But it is, the first thing is that this individual, whether it's a partner or whether it's a bookkeeper, controller, CFO, they're not providing financial statements. The second thing is that those financial statements, whenever they actually go into QuickBooks, they aren't reconciled. So because they're needing to create numbers, if they are providing financial statements, either they just don't provide financial statements because they don't want you to be able to see anything, right?
Mm-hmm.
The next level is you're demanding financial statements, but they need to make those financial statements look like you expect. So I had this one case that was in the manufacturing world, and this person was having like expense reimbursements, and I'm using air quotes for audio listeners, but expense reimbursements paid to him via check out of payroll. So payroll would be direct deposited, and then these expense reimbursements were being mailed to him at the office, like a paper check. These were $200,000, $300,000 a pop. Like, I mean, there is no expense this guy is paying for that is that, right?
Right.
And so he had that, but it was in manufacturing. And then he was also using the company credit card for personal things. He'd go out and like he'd go to a steakhouse and pay for half the restaurant's meals on the company's credit card. He bought expensive suits out of the operating account. So all of these personal expenditures and a certain lifestyle, in addition to his salary, were being paid out of the company.
Wow.
Well, everything was being booked by the accounting clerks as, business promotion or whatever. But then at the end of the month, the controller who was in on it, not receiving any benefit, by the way. I don't know why the controller participated.
So stupid controller.
Yeah.
On a lot of accounts.
Yeah. So the controller would then reclassify all of these business promotions to projects on the balance sheet. So he'd reclassify, because it was manufacturing, so he'd reclassify it to a job that didn't exist. And he'd call it CEO's job, reclass to CEO's job. And so anyway, so I know that's a little bit of technical accounting there, but my point is that the reason they were doing that is because my clients were sophisticated at looking at financial statements. And so if they had seen that business promotions were really high or that cost of goods sold was really high, they were looking for certain ratios on that P&L. And so they would have seen, they would have started asking questions. So anyway, they're trying to make, whoever's stealing money is trying to perpetuate, they're trying to keep the scheme going. That's the only way this works, is if they can hide it, keep the scheme going. So they won't reconcile the financial statements, or they're going to move stuff around to make it where there's not something glaring on the financials. But yeah, so those are some of the common things that I'm seeing right now. And really, to detect it, you just can't rely on your financial statements. You need to just look at your bank statements and your credit card statements. Right. That's why those financial statements are they're unreliable. But if the person is refusing to give you bank statements, credit card statements, or your financial statements, this happens a lot. An owner will call us and say, my controller won't give me my bank statements. Well, your controller doesn't own the business. So we'll coach them through. This is how you need to go to the bank. Yeah, you need to get access to this. So if those things are happening, there is not, I've worked over 200 cases like this in my career. There is no logical reason for these things to not, it doesn't matter what the controller's saying or what the bookkeeper's saying or your business partner is saying. There is no legitimate reason to not provide the owner or an owner of the company with financial statements, bank statements, credit card statements, and payroll reports. There's no reason.
Let me ask you one quick question on that. First of all, a lot of people aren't good at reading financials like your example people. One thing I say is get regular reports and you will become better and better and better at it. You'll see differences. But who should prepare those, what I like to say is closed, I guess that means something reconciled financials by the 20th of the following month, every freaking month. But who should prepare those?
I would normally say, like, if you don't have the infrastructure where you can have multiple people involved, where, like in my example, they had 2 or 3 accounting clerks, they had a controller, there were plenty of internal controls within the structure. The reason the fraud was able to happen is that the CEO was colluding with the controller. Anytime there's collusion, it's going to break your internal controls. So, that probably sounds hopeless to anybody listening, but if you don't have collusion, these things are great safeguards. But if you don't have the financial, I mean, for my team, I don't need 3 accounting clerks and a controller, and right, like that's just going to be an administrative it's just an overhead expense is not necessary. So what I would say is if you've got one bookkeeper that's recording things, then you really need an external accountant to run those financial statements. However, here's my caveat on this, is that whenever they go in, they need to have a checklist that they're telling you the things that they've checked. That they're not just going into QuickBooks, running a P&L and a balance sheet, and then sending it to you without making sure things were reconciled. Because I've seen that too. So
what are some things you would put on that checklist?
Is QuickBooks reconciled? Did I verify that the check payees that are in QuickBooks match that on the bank statement, at least for the large ticket items? We had a case one time where this guy had great internal controls. He had a really nice big business, segregation of duties, all the things. And then he had an external accountant who would come in and reconcile the accounts, which is great. These are all great steps. Reconcile the accounts and run his financial statements. Great steps. However, the CFO was writing checks to his spouse, printing those checks, going back into QuickBooks and changing the information on the check so that it didn't show that it was paid to his spouse. So when the bookkeeper came in or the external accountant came in to reconcile, I don't know how many people have reconciled in QuickBooks, but it'll show you the date, the check number, and the amount. It doesn't necessarily show you who was paid or, and it may show you that now. But if you don't go and actually look at the check image to see, is that who was actually paid, then you can be reconciled and still be missing a lot of money. So that's what I would like, have this checklist where the bookkeeper has gone in and checked the large ticket items just to make sure that QuickBooks actually matches what's on the bank statement.
Yeah.
I'm sure a lot of people are going, oh no.
However, but here's what my goal has been, because whenever I first started in this field, especially on my own, every time I got a case, I thought, oh my gosh, I've got to figure out something that's new. And I talk about this a little bit in the beginning of the book, where I had this business coach who said, there's a finite set of problems you're trying to solve every day, Leah. So there's a process that you can create where you're not resolving something every time you get a new engagement. And so this really helped me create now what we have, which is our data sleuth process, to go, oh, you're right. Every case is the same. The story around it is different. And so we created this process. So as I'm telling these stories, it may, like at first glance, it's like, oh my gosh, they could be stealing from anywhere. But they really can't. There's only 2 big areas that someone can steal money from you. And it's as it comes into your business as revenue, or it's as an expenditure as it leaves your business. So we have a lot of trainings on our YouTube channel and podcast and even our blog. We've got some tools on our blogs that talk about how you can evaluate the risk of fraud in those 2 areas. As I'm receiving money coming into my business, and then money leaving my business. And then how do I just check those things to see if that's happening? If you go to the ACFE's website, and I'm a CFE and I love the ACFE. I spoke at their conference a couple weeks ago. But they have all these different schemes that could happen, and that seems overwhelming. But really at the end of the day, where do your people have access to cash? And if they were going to, and I'm not talking about like
cash in
actual cash.
Greenbacks.
Yeah. It's any type of, money that's coming into your business. So credit cards, whatever, checks. Where do your people touch those things? And if they were to steal, where would they steal? And then how would you know? What do you have that would tell you, oh, this is why this is wrong? So I break that down further in the book, and I also break it down further in a blog post about fraud, like fraud detection and how you can do that. But so I really try to come at this. I mean, the stories are what's interesting, but the stories can also be overwhelming to somebody who thinks, oh my gosh, I may have a problem. But I really try to simplify it down to even if somebody's stealing money, you can find it.
What I'd like to accomplish with the stories is not to frighten people away so they just throw their hands up, but that it is very real. It can happen. It can happen. Your best buddy can be the one that's sticking it to you, and that there are some things that you can do and should do, must do, to at least, it's like soft or internet security. There is no such thing, but there are a lot you can do to reduce the risk. And I had the lady that sold from us, well, I had a neighbor, let's start out with, across the street, had a nice business. He was 85 years old, sharp as a tack, and he told me one day, I fired so-and-so. Why? Caught her stealing from you. Really? What'd she do? She created a little company that was similar sounding to hers. She would collect small accounts receivable payments, put them in her bank, and delete the receivable. I said, well, that's all traceable. Well, it should be if you have the audit feature on and all that. Who's tracing it? He only caught her because she called up, a customer called up about something on, and he looked for it and it wasn't there. And of course he didn't, as we talked a little earlier, he didn't do anything about it. He just fired her. She was a loyal employee all those years. The gal who stole from me, we had a lot of Chase credit cards, and we paid them off several times during the month, right? She had a Chase credit card, just paid hers right along with ours. And then in a very sophisticated deal, or relatively so, she took the expense and posted it in the prior year, so I wouldn't notice it in the P&L. Well, that throws off your beginning balance. So in December, she went back and went to all those dates and reversed those entries and scattered them throughout the year so they didn't show up.
Oh my.
Or didn't glow, let's say. And that also was her downfall because she had written notes to know where to look. And when I had the IRS in Oklahoma City detectives came in, there it was. I mean, she didn't fight. She went to jail. And we got our money back, but sorry. But I love those kinds of stories because that's how somebody did it.
So interesting. I think about the business owner who doesn't look at their financials, who has an accountant that's external and trusts them. And, oh yeah, I've got books and, we talk about them every quarter or whatever it is. But like, for some people, they don't even really know what reconcile means. So, Martin, I know that you have a process that you go through with even just your business, and it's kind of funny to me sometimes because you're the only person in your business. But
yeah, but I can't be trusted.
You can't be trusted. But what are you doing every month when you say that you're reconciling your books? Let's just clarify that for some people.
It's pretty simple. I don't have a lot of receivables and inventory and things like that, but I reconcile with the banks and I reconcile credit cards. I'm also CFO for my wife's business, and we have a lot of bank accounts for various reasons. We have a company that owns a building. There are 5 credit cards. I just reconcile everything. And
so
I
what do you mean by
click down,
reconcile though? Like make it fifth grader. What are we doing with our reconciling here?
Match and agree. On this over here, it says there was a $200 expense to Home Depot. Go over here and see what showed up on my credit card. I mean, is that actually, we've got an expert sitting here. That's who we need to hear from. I like it. And that is a major, I mean, it's a burden, but I like it. When everything's done and reconciled, I get to click, boom, right?
Yeah.
So that's something that really helps, because if you despise it, you don't know how to do it, there's something wrong, and you may understand what reconciling is, but you don't know how to do that in QuickBooks.
Yeah.
Anyway, Leah will have more concrete examples and maybe some other stories along this line. But yeah, that's the fundamental is to match and agree with something. Right. External, credit card company, mortgage company, bank. I'm trying to think. I also like, and Leah, maybe you can describe this, but many times when I walk in, people who have books, and I'm a new coach and I want to see their balance sheet. Well, forget the balance sheet. I just go to accounts receivables. And there are a bunch of negatives in there, right? Negative accounts receivable mean that they overpaid you by double. And I would go, who's this guy? Oh, he doesn't know me anymore. What's this? Did they pay you twice? No. Well, I immediately know that nothing in their books is correct.
Yep.
So there's reconciling with your accounts receivable. And that's pretty obtuse for our general contractor. That's not fun to do. Don't know how to do it. Takes all your time. So you've got to find somebody else to do it in there. You agree with that, Leah?
Yes. So for most businesses, because I actually got some pushback, I have an episode right now on my podcast that talks about bank statements as an evidence source. And I got some pushback about what I'm going to say, but this is just for the most basic, the most common business are those small to mid-sized businesses that maybe just have one or two people doing their books. That's what I'm talking about. Their financials are prepared for the purpose of a bank loan, typically, and for taxes. That's the purpose. So they're not kept on accrual and they're not audited and they're, we're not doing all this stuff. So on a cash basis, whenever you're reconciling, you're just wanting to make sure that whatever went through the bank is in your system. And whatever is in your system that hasn't yet cleared the bank, then I ask myself, why hasn't this cleared? Should it have cleared? But I'm just making sure I'm taking something that someone that I've trusted, that's supposed to be good at this, maybe it's myself, but I have controlled QuickBooks this whole time, or my bookkeeper has controlled. So there's human error involved. Forget fraud for a second. There could just be, I forgot to record a transfer, or I forgot to record something. By comparing that to the bank and the bank statement at the end of the month, that helps me make sure, okay, I didn't forget anything. I'm not going to overdraw my account. That's how we know these things. And then at the end of the month, hitting that reconcile button that Martin, you were talking about, that tells us, okay, everything up until that, through that date of reconciliation, which is usually the last day of the month, it matches, we're good to go. Then the next month, I only have to reconcile those 30 days or those 31 days.
Yeah.
I have a situation that came up that I referred elsewhere, but they had imported everything from the bank into QuickBooks, but had never done that reconciling step. And so whenever I'm looking at it and they're wanting to know where the problem is, I now have to go back 5 months and reconcile 5 months of these things. Like, that's why you just want to do it on a monthly basis, check your transactions, and also there's this sense, I know, like, I am involved in our billing process. I know how much we're supposed to collect. I know, I should have this general sense of, so if I feel like our cash is tight, I'm going to go look at those receivables that you were talking about, Martin. I'm going to say, who have we not collected from? Because we did a whole lot of work last month and we should have collected by now. So then I can get my executive assistant on the phone or myself saying, hey, just checking on this payment, right? And then if that client says, oh, I sent that payment, now I'm asking questions, where did that payment go? Did we receive it? Did it get sent somewhere else? So really, a lot of times just detecting fraud, it doesn't even have to be really a science. When you're the business owner and you're that close to the operations, you have a general sense of, and I think a lot of times whenever somebody's not great with numbers, they really discount that sense that they have. Like, what you're selling, what you should be collecting, roughly what your expenses normally are or should be. And if they're not, ask questions and don't let the bookkeeper or controller, the people who are quote unquote good with money, explain things to you and they don't make sense, but you're like, I'm not a numbers person, and you just let it go. Like, accounting is just on the cash basis system, which is what most people are on. It is simply categorizing. To summarize, for the financial statements, you're just categorizing where did money come from and where did it go. That's all you're doing.
Yep.
And so if your bookkeeper can't explain where did the money come from and where did it go, keep asking questions. I can't tell you how many stories I've had as an investigator, or I've heard from other investigators, that they'll say, well, yeah, I just assumed that this was just over my head. Well, that just perpetuates the scheme. Things usually make sense, especially in the world of accounting. Like, it's just money. You collected money and you spent money. That's it.
And what's
Keep
left
asking
over.
questions. And what's left over. Yeah.
Yeah.
I really like that. You've simplified a couple of things. One is regular financial reports that have been reconciled. And then where did it come from? Where did it go?
Right.
Right. You don't have to get into basis and even debits and credits. I mean, they're there, but you don't have to do anything with it. Just those two things. So, Khalil,
So whenever you feel like you're running up against this, you're talking to someone internally or even externally, and they can't answer the question, where did it come from and where did it go? And how much do we have left? What is your process for what should I do as the business owner that's uncomfortable? I've asked questions. I don't feel like they're really honestly and truthfully giving me the correct answers. Do I call you immediately? What are the next steps, and what is that process like of figuring out what to do next?
Yeah. The first step, if they want to just do a little bit more digging, I mean, I will say the sooner you get a forensic accountant involved, the better. I've dealt with over 200 cases in my career. There's other professionals that have done the same, even more. So whenever there's an issue, we can help you get to that issue before you fired the employee. This is actually this is one of my favorite things to do, and very few people take us up on it. Whenever you find a problem, if you cannot make sense of it, call a forensic accountant, have them just look at the last 6 months to a year and try to get them to do it in like a 2-week time span. That would make me sweat right now because we have so much work, but try to do that. And don't let your bookkeeper or anybody know about it. Now, we don't want to entrap them. We don't want to try to set them up to commit fraud or anything like that. Let's just do a look back of 6 months to a year. And what that's going to look like is taking the bank statements, summarizing those by payee from the bank statements, summarizing it, and saying, is there anything on here that we don't recognize? Is there anything on here that was not for the benefit of the business? We're going to do the same thing with credit cards, if there's a credit card being used. And then we're going to look at payroll, and we're going to compare what is this bookkeeper paid versus what does her agreement say. Hopefully there's an agreement. But we're going to compare that and look for anything that was not for the benefit of the business. And we're going to do that over a 6-month to 1 year period. Then
and that payroll, look for people whose names you don't recognize.
That too.
They got that going on right now. 6 guys who don't work there were getting paid. Sorry.
Yeah. So you can look at that. And a lot of times, if they're paid by check, that'll show up in that summary from the bank statement. But yes, if it's direct deposit, looking at that payroll report. But we're looking out of these 3 sources, we're looking for what transactions did not benefit the business and would have benefited the subject. That's what we're looking for. If we go through this process and we don't find anything, maybe you're fine, but you just start really watching your financials. If we find that there are transactions that, oh man, there's not a Mercedes that benefits the business. Like, we're making payments to a Mercedes loan. We don't own a Mercedes. Owner doesn't own a Mercedes. Okay, now we might want to start asking some questions about this. So then we want to take that information, the forensic accountant, and hopefully they'll know whether they are good at interviews or not. But anyway, you want to go in and interview the employee and show them these transactions and ask them, and have the forensic accountant do this, because they're not going to fool me. You can't. I know what I'm seeing. I know my process. So what was this for? How did this benefit the business? How is this set up? So we're going to go through those transactions that the owner didn't know about. And every single time that we've been able to do this in this way, we get a confession from the employee, and the employee is willing. They will confess. It may take 3 hours, and 2 of those hours may be nothing but silence. That's happened before too. But we will get a confession, and from that, our best evidence source of what happened during this time period is the person that did it. So if we fire this person because we're worried or we're mad or whatever, if we fired this person, our best piece of evidence just walked out the door. And now they've gone to hire a criminal defense attorney, and now they're not going to talk to us, right, without going through it. Now, there's still resolution that way. If somebody has already fired this employee and they're like, oh, no, I shouldn't have. There's still a resolution that way. But the most ideal situation is just to look at that year, go talk to that employee. This is where this is also key. I had a situation like this, construction company, They were afraid that the controller was stealing money because there was another one of their buddies' construction companies, their controller had gotten off with millions and millions of dollars. So he was just kind of concerned, like, oh, I've never really thought about this person doing this to me. So we came in and went through the process I just talked about. And I said, just let us look at this. And he wasn't convinced she was stealing, but he just wanted to make sure. So we looked at a year, and there were some strange transactions, but nothing crazy. And so I said, let me, can I just talk to your employee? So the owner was present for this interview. I went in, I said, hey, this is what we're doing. She was very mad that he had hired us. So after we worked through, hey, he's doing what all great business owners should do if they're concerned, he has the right to do this. We just made it, I just kind of had to work through it. And then I said, all I want to do is get your perspective on a few transactions. And she said, okay. So we started going through the transactions. One of them was the purchase of like $3,500 worth of golf clubs. And I said, can you tell me what these were for? She was like, yeah, those are my golf clubs. I said, why did you put it on the company credit card? And she looked at him and she said, you told me I could. And he said, what are you talking about? And she said, I asked you if I could buy these golf clubs and put them on the company credit card. You told me I could, and that I could pay it back out of payroll. And he says, oh yeah, I did. I did say that. And so then from that, I said, okay, well, if you've been paying this back out of payroll, how can I verify this? Like, help me help you. How am I going to verify this? She said, I'll print off the spreadsheet. So she had been tracking, paying this off on the spreadsheet. So even in this example, she wasn't stealing. We did not find any evidence of her stealing money, especially during this 1 year period, the most recent year. Nothing. But, which I feel really good about, because that's somebody who was about to be fired because they suspected that she was stealing.
Right.
And so, I hope that my work will help exonerate someone that didn't do what they are fearful that she did, but just having that conversation. But then at the same time, we've had that same conversation with somebody who was stealing money, over $3 million over this certain time period. And he says, eventually says, yeah, I bought a boat. Yeah, I did this. Yeah, I built that metal building to put all my stuff in. And then, we were able to work towards a recovery, and he was prosecuted federally. I had another guy that we interviewed, same way. We looked at a year's worth. It was very complicated inventory scheme. We looked at a year, and I just took what I knew. I had a lot of questions and a lot of unknowns because it was very complicated. We sit down. He answers my questions. After he confesses, he answers my questions. And then he says, if there's anything else, here's my cell number and you can call me. And I thought, no way. This guy is not going to answer his phone, A couple weeks later, I'm like, gosh, he said he did X, Y, and Z, but I'm seeing ABC. Like, this is weird. I'm just going to try to call him. So I call him. And in the book, I call him Jeff. So I called Jeff. I'm like, hey, and he answers. And I said, hey, I'm seeing ABC, and he goes, oh, you're right. I did steal money that way too.
Oh, gosh.
And he said, and that reminds me, I would also do this. And so anyway, we got it quantified and cleaned up. But that's
Wow.
my favorite thing to do. If you're not getting the answers that make sense, go ask someone that they'll be able to tell you, you're right. This isn't making sense. And we need to get to the bottom of it. Let's go to the source documents, and then let's go ask this person questions.
One thing I like to do is got a little chapter on it in my book, but when you're hiring an accountant or bookkeeper or CFO or whatever, you make it clear that day that it's trust but verify around here.
Yes.
I want you to do everything you do, but an outside accountant is going to look at it every month. We're going to go deep dive into this. We're going to audit. And I don't mean, big 5 audit, but I'm going to look at 5 transactions. And if they're all okay, we're good to go. If there's one missing, I'm going to look at 5 more.
Right.
But tell them up front. They say, you're protecting them.
Right.
Because I think in my case, the lady, actually I was sick about it, but she was involved in high school and just all this stuff. And she took $800 one day, intending to pay it back, and paid a couple of $100 back. And then the most she wound up taking was $14,000 in a month. And it just grew and grew. If I'd have snipped that, she wouldn't have ever gone to jail. She'd still have a job. She wouldn't have all these restrictions on where she can work and what she can do. There were some terrible personal things that went on in her family when she was in jail. And that's partly on me because I was a CEO. I suspected, I wondered weird things, the cash balances, and I didn't do anything.
Yeah.
I didn't do anything until we sold the company and our square up sheet wouldn't balance, and that's how we found it. What are maybe just a couple more ways? I know there are people listening saying, those are big companies. What are maybe some standard things? We talked about separation of duties. Well, if there's only one person, how are you going to do that?
Right.
Maybe you do it with an outside bookkeeper. Maybe you do it with an outside accountant. Maybe you do it with an outside bookkeeper and outside accountant. But what are some safeguards, normal practices that a harried business owner running a $5 million company ought to be able to do?
I think you can look at your bank statements every month. And I think you can look through your credit card statement. I really, really do. If it's just part of your day, I've gotten I was pretty type A about my bookkeeping all these years, for 12 years. And over the last few months, I've been trying to really get rid of some overhead. So of my time, trying to make my time more valuable. And so I've gotten my bookkeeping processes down to just twice a month. But I have that down twice a month, that bookkeeping gets reconciled and it happens before I touch it, before I pay payroll. And so I'm just going to look through the credit card statement and I'm going to look at the bank statement. And then I'm going to look at my receivables. What's still outstanding? What haven't we collected? There was a business, and this guy was running, I think, 9 nursing homes or something. So very large business, maybe 6 nursing homes. Anyway, it was a lot. And he had a CFO who was working for him and a couple clerks. And he called me and said something's wrong with cash. So we start down the most common areas people steal money based on what the CFO and the clerks had access to. We go through all of those things. We can't find where there's any missing money. And through bank statements, credit card statements, payroll reports, everything looks fine. But he's like, there's still something wrong because we have no room in our nursing home. This should be working. So I saw this one entry that showed it was reducing other income, which there's no reason to do that. Other income should just be positive all the time. There's not really a reason to reduce other income, but it was being reduced by millions of dollars a year. So I said, let's go talk to your CFO. Well, of course he's mad. We looked at him, blah, 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 blah. But we got through a few things and I said, I want to ask you about this other income. Why are you reducing other income? And he said, well, I knew that he said, we're behind on collections. We haven't been following up on Medicare, all these different insurance payments, all this. We haven't been following up whenever payments are rejected. And so whenever our claims are rejected, and I haven't been following up on those. And I didn't want the management at the different nursing homes getting in trouble because they didn't even know they'd been rejected. We hadn't been telling them. So instead of putting it under bad debt, I just started hiding in another income. But he just wasn't doing his job.
Okay, so that was what it was. It wasn't that they were paid and he took it. He just wasn't
doing his job. And so to keep the receivables where they weren't just continuously growing, he was just writing it off. But instead of bad debt, he was putting in other income. So he was hiding all of these receivables that were really late, but they still had receivables that were 90 days plus. And so by looking at that report, the owner, could have said, hey, why are these, that would have maybe triggered it before it got to the place that it was. But as soon as he removed the CFO and made sure that they were collecting, he called me it was only a couple months. And he's like, we are doing great because we're actually collecting the money that we're supposed to be collecting.
Yeah.
So I think just looking at those bank statements, credit card statements, you can look at your payroll reports. I would kind of look at payroll on a high level. What do I expect payroll to be? Really, you're just asking yourself the question, what do I expect my deposits to be? What are they? What do I expect my expenditures to be? What are they? What do I expect payroll to be? What are they? If there's differences, go look at that.
Do you see any instances of outside external accountants, bookkeepers doing the embezzlement or the fraud? And what does that look like? Because I'm sure there's people that they're not big enough to have an accountant internally or a bookkeeper even, and they just outsource it. How worried should they be?
Yeah. So if you're going to outsource those steps, in my opinion, your external bookkeeper, your outsourced accountant, they need access to your bank account only to see reporting, only to see. They cannot make transfers. They can't pay ACH. They can't make wires. They do not need to be able to move any money within your account. They don't need to be making deposits for you. They need to only be telling you what came in and what went out and putting it in the right category so that you have financials by the 20th of every month. Like, that's all they should be touching.
Yeah, but I'm even thinking about like the payroll aspect. Like, I know a lot of people outsource payroll. So I don't know.
Outsourcing payroll, I personally recommend that you outsource to a payroll provider. And I don't know, if you have accountants listen to this, they might be mad. I do not recommend outsourcing payroll to an accounting firm. Outsource it to a payroll provider. They usually have the technology like Paycom, Paychex, Gusto. They've got the technology where a lot of this is happening automatically rather than someone actually filling out a 941 or a 940. And so I feel like for accounting firms that aren't set up that way, they're doing these things more manually. And I just think that that's more room for error. Instead, outsource that to a payroll provider. A weird case that I was called on a while back, I didn't get to work it, unfortunately. We were just too busy. But this company, like, exploded after 2020. They were in the real estate business, just exploded. And so they didn't know. I mean, they went from decent. They kind of handled their stuff between them. It was husband and wife, Pandemic happens, real estate blows up. They're making tons of money, hiring tons of people, all this stuff. So they're like, oh, we just need to outsource this. So they outsource everything, including some access to the bank accounts, to an accountant, a CPA, licensed CPA. And it doesn't matter if somebody's licensed. It doesn't matter. People do what they want. It doesn't matter. You hope that that's a little bit of a deterrent, that they're like, I don't want to lose this license I worked so hard for. But in a pinch, they're still going to decide, what benefits them. So they outsourced this to their accountant, and he was doing tax returns, payroll tax returns, bookkeeping, all this stuff. Like I mentioned earlier, he was not providing financial statements, and they kept asking him, where are my financials? Oh, I'm just behind. I'm a one-person shop, all this stuff. Well, where are our tax returns? Oh, yeah, well, I don't have those ready yet. And you can't you cannot prepare a tax return without financials, and you can't have financials if you're not reconciled. So, that's the order. So anyway, they hadn't been able to file tax returns, all these things. So after talking to them about this whole mess, he also was refusing to turn over certain financial records whenever they said, hey, we just need our stuff back. Let's just part ways. He also was not charging them. And they're making tons of money. And they're like, we need to pay you for your time. He's like, no, I just want to help you guys. So obviously, there's a lot of red flags. You want to trust them. A lot of times people who are in these positions are pretty good at sales, and there's a manipulative component here. So anyway, basically what we believe was happening, and we didn't get to work this for them, but we believe that he was preparing tax returns and filing them and then getting the refund himself, directing it to himself, and then he would provide them with a different tax return. So they didn't actually know what was happening, because there's no way. So there are risks there, which is why just those red flags are really important. This is going to sound a little pessimist on my part, and I really try to be like, we can be problem solvers, we can solve this. But so this is going to sound a little pessimistic for me, but I don't believe that you can prevent 100% of fraud. I just think that if you're looking, you'll detect it earlier. Most of the schemes that we end up working, the size cases we end up working, we're looking at losses that are 500, but really $1 million plus. And the reason is that this person's been employed so long, their scheme has gone on so long. So if it had been caught within the first 6 months, it might have been $20,000. But now they've been doing it over 5 years. Now we're at 3.5 million.
Yeah.
Wow.
Well, you just took one of my final two questions, and I might rephrase it, see if you give a different answer. But what is the probability that a gate cut listener, meaning just a random sample of people who are listening, that they have fraud going on in their company right now and are losing? Just throw out your opinion. Like 10%, 90%, 50%?
Gosh, I'm really pessimistic about this. I don't know. I'm going to be
No,
but I think maybe like 75%, 80% is what comes to mind.
Wow.
And now I'll say this too. No one has ever in my business, because of the controls I have set up, no one has ever written a check to themselves. But have I caught people falsifying their time? Yes. So it can happen at different levels. And so that's why I think it's higher. It may not be that a bookkeeper's writing them or that a CEO is having a controller write them $200,000 checks. It may be that somebody's not working the hours they said they were working.
Yeah.
Right. And I want to remind everybody what I always talk about is if you sell $1 million and you make $70,000 before taxes, and then you've got $40,000 left over after taxes, and somebody takes $1,000, that's not 0.1%. That's like whatever 1 divided by 7 is.
Right.
That's a huge hunk of money that should have gone to you as a reward for running your business.
So within a business, like what you were just breaking down with the different percentages and what you're left over with, the piece of the business that someone is stealing is your profit piece. That's the piece they're stealing. They're not because rent has to be paid. Loan payments have to be paid. Payroll has to be paid. So they're going to, the extra is the profit. So once the profit is gone, that's when they start stealing, and it's impacting payroll taxes. And that's when it creates a lot of other, but while there's profit in your business, if someone is stealing, they're stealing that profit, which then is why it creates a cash flow problem, because you don't have the profit to reinvest or to tide you over between jobs and things like that.
We need to come up with a standard agreement where we can assess our vendors a portion of fraud and get them to sign it. Yeah. Well, we're down 3% on fraud this year, so I'm going to reduce what I pay you on rent.
There you go.
I'm not sure we get anybody to buy in.
Probably not.
What are some of the, like I think of construction companies, I'm thinking about maybe inventory or equipment. What are some of the fraud that maybe you've seen in those areas? I know that may not be the area of focus that you have because you're focused a lot on the financials, but anything that you've seen there?
Yeah, so fraud. So I like to, again, by looking at how does money come into my business and how does money leave my business, one of those areas is in equipment and inventory purchases. Right. So I'm going to spend money to purchase equipment and inventory. And so I need to be looking at, do those things seem reasonable? Is, am I overspending? One of the craziest cases I ever read about was this guy who worked for a hospital, and he was purchasing printer toner, and he stole $35 million of printer toner from a hospital over this very long period of time. But he would over order the printer toner, and it was extremely expensive. I mean, this was years ago. I mean, printer toner is still expensive, but 10 years ago, it was really expensive. So he would take it, and then he would go sell it on eBay or wherever. And so he stole $35 million worth of toner. Wow. So we're really looking at anywhere that an employee, like the risk is anywhere that an employee could increase their purchasing power. So if I can over order actually one that was kind of recent that we worked with another investigator on was this guy was over ordering Apple products. So he was over ordering iPhones, and this company had a lot of people that had to have work phones. And then he started buying like really fancy iPhones and then Apple computers and all these things. And then he would go and sell those to somebody. So it was a big like ring, but that increased his purchasing power. Like, I can just order a few extra iPhones, get a few $1,000s off of these iPhones. It gets charged back to my employer. Yeah. It was it was close to $1 million. I think it was $700,000 or something over the time frame. So, so it can happen in equipment. It can happen in inventory. That just even theft of inventory, So I'm just always looking for how can someone increase their purchasing power. Like I like to say that accounting entries don't cash at the casino. So like I need to find a way, like how do my employees or business partners or whatever, how are they going to pay to gamble at the casino? They've got to put more money in their bank account. So it's either going to be stealing deposits as they come in or overspending in equipment that they're then taking to sell to somebody else, or they're going to just write a check to themselves, overpay themselves in payroll, or they're going to have credit card expenses that are for their benefit.
Make it really, really clear and simple.
Mm-hmm.
Yeah. I think maybe kind of as a way to wrap up, I think a lot of our listeners are married and maybe even run a family business. And I would love to hear maybe some of the reasons why you don't do divorce cases and what you see in some of those cases that maybe listeners should be aware of.
Yeah, the divorce case is really, that's a personal preference that we don't work very many of them because they're just extremely emotional. And there's only so much of that I can handle. So our team, I mean, you can just kind of feel it on the team. It just kind of sucks the energy out of the room. So we try to limit how many those that we do. But the ones that we do enjoy working on are those where there is a family business because we can we can create a lot of value there. And not even because somebody's doing something shady. Well, they are. I'll just set the scene. So you have a family business and there is a inherent, like just an incentive that whenever you're running a smaller business, that you're going to reduce your taxes, right? So there are some things that business owners choose to run through their financials that are more personal in nature, that they think this is the gray area. I can reduce my taxes or whatever. I'll take the risk that I'm audited, whatever. So you're reducing your income over this, however long you're in business. You're reducing your income for tax purposes. Then one of the parties files for divorce. Well, if we take those financials and because at the end of the day, and how we're involved is at the end of the day, we've got to divide this marital estate. And we've got to divide it between the parties. So this business is going to have to be valued. We got to have a number on that piece of paper to divide. So whenever the business gets valued, a lot of business valuation experts will, especially if they're working for the spouse that controls the business, they're going to say, oh, this is what the financials show. I've run my calculations. The business is worth X. So my favorite example, this business valuation expert valued 5 businesses and said the businesses were worth $50,000. That was the total value of this business. That was what was going to go on the marital balance sheet. So I get involved and I noticed that these 5 businesses all had different year ends for tax purposes. All of this was strategic tax planning, right? Like this was not, I mean, we can talk some other time about whether they were defrauding the IRS. That's not what I meant, but it wasn't to rip off their wife, or their spouse. Okay, so that was not the intention. So they're running all these tax strategies. They're on different year ends, so they're deferring revenue, making it look like they're not making that much money. So what I did instead was I recommended that we put everything on the same year end so that we could actually see what money was moving between the accounts. They had over $30 million in transfers between these 5 businesses. So how is this worth $50,000? Okay. So, and this is transfers, just taking money out of one pocket, putting it in the other. So it's not like it was revenue, but still you got to have some money to be able to move 30 million around. All right. So when we did that, we then looked at what was the benefit, like how many personal expenses had they run through the business? What were these businesses what was their cash net income at the end of every year when they're all on the same year end? And the business valuation expert on my side put that into the equation and determined that it was 1.5 million was the value of this business. And by doing this, we actually testified on it and the judge adopted our side's opinion of value. And so that's like one of my favorite wins. But in doing this work, a lot of times when you've got these family-owned businesses, they're very comfortable setting up additional LLCs. So they might spin off and create another business somewhere that the outspouse doesn't know about. So by performing basically the same things that we do in all the other engagements we've talked about, we're doing the same thing. We're looking for what are entities we don't know about, what are personal expenses being run through the business, what's driving down that income, and then are there additional assets out there? I've actually found investments in startups before by doing this, that nobody put that on the marital balance sheet. So
Apple in 1984.
Right,
Yeah.
right, that.
Hey, I have one last question before we go.
Okay.
People listening, they've already found somebody committing fraud, right? And they terminated that person. Why would they benefit from using a forensic accountant to explain what happened? Is there, it's going to cost something. Well, I already fired this person. Would there be a benefit, and why?
Yes, I think you should know what happened. I think you should know what extent it happened. Depending on the dollar amount, you may need to file some amended tax returns and charge that loss to that individual, depending on how that happened. Now, if it's already been expensed, it's kind of a moot point, but they've basically taken money without paying taxes on it. So there's some things you could do there. And you're just going to need help knowing whether you may need help knowing, do we amend this? How was it treated? Things like that. But then also just understanding how this person stole this money should also help you build back better. I mean, now you've removed the problem. Let's not put another problem in the same place, in the same environment with the same opportunities. Let's fix that so that going forward, we've mitigated that risk.
Fantastic. So,
yeah. Wow. Well, a wealth of information and such an interesting topic that I'm sure business owners don't think about too often. But we've got the Data Sleuth book that Martin's holding up.
Yeah.
It's more of like a textbook, Martin said, but you've said it's chock full of stories like you've shared today.
Yes.
Yeah.
So I think that's a really interesting one. Also your podcast, which they can find just by going to your website or by searching Data Sleuth.
Yes.
Okay.
Our
And you've
website has links to the podcast. It has our blog. It has links to our YouTube channel. Like, it's really the hub for all this information that we've created for business owners.
Great. We'll put all of that in the show notes for everybody. I think, my takeaway for business owners is really trust but verify. Always try to reconcile and make sure that the statements on your credit card and your bank statements, make sure that those match your books. And then if you do suspect an issue, don't fire the employee. Go get an expert to come and look in, and then maybe interview the employee so you can make it a much simpler process. So that was really good. I appreciate it, Leah.
Yeah, thanks for having
Leah.
me.
I could talk about this for another 4 hours.
I know. I could too.
I'm not sure
Reel
they're
me
yeah.
Excellent. Well, we appreciate you. Thanks, Leah.
All right, thanks.
Thanks for listening to The Cashflow Contractor. Check out our website in the show notes or visit thecashflowcontractor.com.